Thank you for joining us at xn.com. In this preview video, we'll be looking at the upcoming U.S. inflation report out on Wednesday and, of course, the outlook for the dollar. Fed Chair Powell and his colleagues last week said that they will be data dependent regarding their next moves, putting that much more importance on the U.S. CPI report out this week. I'm Cristina Marujos. With me today is our senior investment analyst, Marios Hadjikyriacos. Marios, although inflation is expected to have moderated further in April, the latest business surveys suggest the opposite. So what are we likely to see in the CPI report, and how could that possibly change the market's expectations of rate cuts by the Fed?
Hello, Christina. In a nutshell, I'm looking for an upside surprise in the inflation figures, and let me break that down. So, as you correctly pointed out, the forecasts point to a slight slowdown in core inflation in April, and the expectations for the headline CPI rate to remain unchanged at 5%. So overall, the market is looking for a pretty benign report, something that would confirm the recent narrative that inflation is cooling down and so on. However, most of the signs we've gotten in April about the April economic data polls in the US were pretty encouraging. And specifically, I'm going to talk about business surveys, which the business surveys from S&P Global suggested that in the prices charged by companies rose at the steepest pace since last summer in April. So that suggests that, and of course that fits with all of the other economic data we've gotten so far. It seems that the American economy reaccelerated a little bit entering the second quarter, and that translated into stronger inflationary pressures. Now, we see some upside risks from the business surveys, and at the same time, the Cleveland Fed has a model that tries to forecast inflation month by month, and that model is also pointing to upside risks, specifically about the headline CPI rate, which this model expects to come in at 5.2% versus the 5% that the market is looking for. So, if anything, I think we're more likely to see a relatively minor upside surprise, maybe in this data, and that would cast some doubt on the market pricing that the Fed is going to start cutting interest rates very soon, possibly as early as this summer.
And now let's turn to the dollar. Its gains have been rather contained recently. What should dollar traders anticipate this week?
Yeah, so look, the short story about the dollar is that it's been unable to find any love this year. What I've noticed is we have a relatively asymmetric reaction function. When the dollar gets strong data, it doesn't really rally, but when it gets weaker data, it falls. So there's been this lethargicness, this sluggishness in the dollar so far this year. Now, for that, we might get an upside surprise on Wednesday. That might help to dispel some speculation about Fed rate cuts, and that might support the dollar, but I doubt it's going to be a massive game changer either, right? The dollar has been so extraordinarily weak because the market continues to speculate about Fed rate cuts, and I think because of how sanguine, how ecstatic the mood has been in stock markets this year. So for the dollar to really be able to rally again, we would need to see one of those factors change pretty substantially. So maybe an upside reaction this week, but whether that can be the beginning of a new uptrend remains doubtful for now.
Marios, thanks so much. This was a preview video here at xn.com.